And welcome to the VSA Capital Tech and Transitional Energy podcast. It's Thursday, May the 18th. We've got a weekend coming up, and it's only a 2-day weekend. That's going to seem so short, isn't it, Phil?
It is, Andrew, and the weather is improving as well, and we're in for a bit of a sparkling week next week.
Sounds like it's time I headed back down to Cornwall.
I think it may be, indeed.
Anyway, look, we've somehow got to keep the wheels on the bus turning, as they say, because these are tough markets. There's not a lot of money around there, although there are little pockets of blue sky where people are starting to raise things. I'm sure we'll talk about Gresham House Energy Storage later on. Obviously, they had news today of raising quite a lot of money. And actually, of course, there was a huge deal earlier in the week done by a consortium of about 30 banks placing over £2.5 billion worth of London Stock Exchange stock. So there is a little bit of life out there. It's still a lot about M&A and takeovers. We announced one this week, not in the tech and transition energy space, but the takeover E&P, Egdon Resources. So sadly, the number of listed stocks is still shrinking. But who knows? Who knows where the future is? So much of it, I still think, depends probably upon where the Ukraine war ends up. We really could do with a resolution to that in some form. My own view is if that's going to happen, it's probably going to be China somehow actually successfully brokering a peace deal, and they will have to give something to keep Putin happy and in power. My own theory is actually what we're going to probably see is China trying to put together a NATO equivalent in the East, so a sort of East Pacific Treaty Organization, an EPTO, which would have Russia and China, maybe India, the Stans, and then Putin could turn around and go, look, by invading Ukraine, I've created a complete competitor to NATO, and look how much stronger and more powerful we are. I think that could be the solution. Whether we need to have a sort of demilitarized zone in the east of Ukraine, that's also another solution. But I think a solution's got to come along pretty soon, because the West is otherwise going to also get fed up, I think, with supplying arms to Ukraine. And Ukraine also needs to probably do a summer offensive and really give the Russians a bloody nose. So my feeling is before the end of this year, actually, now I think something will be resolved in some form or other. I think the world is getting fed up with it, and that would be very good news for the market. Maybe then we can all get more money flying around and do some deals, which is what we like doing. Anyway, that's enough of my preamble. It's really got nothing to do with tech and technology particularly, although Rishi Sunak obviously is out in Japan for a G7 meeting and has announced a £1 billion sort of joint venture with Japan over semiconductor chips. £1 billion in semis doesn't go very far. You need an awful lot more than that. And of course, the big topic at the moment is, this whole issue of, is the UK building enough lithium batteries in order to supply the EV companies, or if the EV companies got to move over to Europe because of these tariffs? Look, we know we don't have a strategy at all for business, for the financial community, for critical metals, the batteries. We just don't have a strategy. Hopefully, though, Rishi, with his to-do list, which he's slowly ticking off, will get around to that at some stage. Who knows? Anyway, look, I know there's also a huge number of results out. So, Phil, I'm not going to catch you out at all today, because I haven't really had a chance to look at most of these things. So I'm going to let you, I'm not going to tell you off at all. I'm going to give you free rein and not suggest that you've missed anything. I'm going to be really nice and friendly.
That's very kind of you to do that, Andrew. And you're right, there has been a lot of news. One that I was looking at pretty closely this morning, wobbly enough, was National Grid. Very relevant to the energy transition and to what's happening in the UK. And obviously, they're responsible for the grid expansion of the grid and managing it for the transition. And they reported their profits were up by 12% to 4.9 billion. And they had a sale of certain businesses that helped that as well. But importantly, and the bit I was looking at was that the capital investment budgets, and they've got investment going in of 7.7 billion for ongoing operations, and that's it's up $1 billion on exchange rates. And they said that the focus of this investment is primarily the energy transmission and delivering energy security. So, you know, good to see that scale of investment, but let's see how that is actually spent. I mean, they said that in April they've got a new business unit, strategic infrastructure, to deliver 17 major electricity transmission projects to help with 50 gigawatts of offshore wind generation. So let's, as I say, that'll be interesting to see. Now, I mean, related to the grid and aptly named with a ticket grid, GRID, is Gresham House Energy Storage, which you mentioned earlier, Andrew, the Energy Storage Fund. And this fund, Grid, they own 590 megawatts of operational projects, generating profits of 48.8 billion in 2022, and have got 437 megawatts of projects underway. So they're a big investor in energy storage, and they've announced that they're doing a placing to raise £80 million. So we'll see how that rolls out. Well, how successful that is. The issue price of this is fixed at 155.5p, and I think that they said that their NAV at the end of March was 153.8p. So
Yeah,
pretty close, you know.
Yeah, so they're raising the money. They say actually the real reason for this money is they want to develop 160 megawatts of solar and co-located 4-hour battery energy stationary storage projects in California. Project Liad, I think it was called.
Yep.
So, I mean, what I find interesting here, of course, and I have had a few people asking me, is, you know, we all know that in California they are really desperate for energy storage. And they're also desperate for non-lithium ion energy storage, because they recognize that lithium ion has a lot of problems, particularly in California, because it basically bursts into flames. So, which is a problem, actually. So what I want to know is, why is it that Gresham House Energy Storage just keep putting in more and more lithium ion batteries and don't look at other technologies? Is it just, I mean, when I was talking to somebody very senior about this, and he said, I just don't get it. And I said, well, look, you know, it's sort of, you know, it's the buy IBM concept. You know, you don't get fired for buying IBM. It may not be the best, but you don't get fired for it. And I think that's sort of the attitude that Gresham House have, is that, yeah, sure, might not be putting in the best solution, but hey, we're making lots of money. Why bother to change? Is that fair?
Very rational. Oh, yeah.
Anyway, there we go. That's my view. Moving on. Let's move on.
Right. Okay, folks. Listen, on some positive news, UK space investment. UK space investment nearly doubles in the past 8 years. This is a report just come out from PwC and the UK Space Agency. And it says that the space industry represents a hidden utility in the UK, supporting an estimated 370 billion of UK GDP last year, 18% of economic output. There we go. So from 1,600 space companies, well, I mean, you've got broader, you know, aerospace technology base in there. But we talked, I mean, we're discussing aerospace, you know, last week on the podcast, and it has such a bearing on technology spend generally, a very important area, you know, for military, civil, you know, and commercial. So yeah, that was that nice bit of news to see there. And of course, we have the Seraphim Space Investment Trust, SSIT, that's listed in the UK, where investors can get general exposure to space technologies. And they have results coming out very shortly, so we'll look out for those.
Yeah, I just hope no one's singing that well-known Beatles song, Lucy's in the Sky with Diamonds.
Go on, Andrew. You got
no, that was it. That was all I was going to say. I wasn't going to do it, but you know, it's a sort of a joke, bit tongue-in-cheek. Sorry, move swiftly on. I shouldn't have said it.
I know, you're allowed jokes in this one. Right, listen, another placing. This is for IQE, the long-quoted compound semiconductor manufacturer based down in Wales, and they've announced a placing this morning. An issue price of 20p, which was a 14.9. Oh, was a 15% discount. And they've raised £30 million of gross proceeds. So, as you say, Andrew, there is a bit of life out there.
Yeah, I mean, obviously, IQE's had quite a history, shall we say?
Yes.
It was, for want of a better word, a punter's favourite. It no longer is. But who knows? Maybe it'll recover.
Absolutely. Right. Now, UK business. Well, in fact, UK business spend generally, something we are watching very, very closely. There were results out from Sage. Ticker is SG, market cap 8.7 billion. And I don't know if we use Sage accounts, but a lot of businesses use Sage's accountancy software, but also, it's payroll. In fact, we do use Sage payroll and HR software. And they reported their underlying recurring revenue was up 12% to £1 billion. And this was supported by Sage Business Cloud growth of 29% to 787 million. I just kind of, what struck me there, and when watching general software spend, is there's you can see a lot of sense behind this. Given inflationary costs in business, managing cash flows right now, and being very close to your accounts, and why their customers are certainly still spending with them, and all importantly, you can see the value here in this business is that the EBITDA margin increased to 25%. Wow, that's a nice profitable business, and their earnings per share are up by 13%. So good set of results from Sage there. They've got 1.2 billion of cash on the balance sheet. Well, that gives them plenty of flexibility if they want to acquire, and they reported strong momentum in their first half.
And the statement was sort of alluding that there could be, I think, potentially upgrades to come. To be honest, it was quite a positive statement. The answer is also we do use Sage at VSA Capital. And of course, this is a stock. If you look at the chart, it's been fantastic if you go back over the years, and it's actually hitting sort of new highs at the moment. So it's loved by the market as well. Obviously, it's a big FTSE 100 company.
Yeah, there we go. But opportunity to invest. Subject of AI is constantly appearing, and for very good reason. But I saw there was an announcement between SAP and Microsoft on joint generative AI projects in the field of personal recruiting. My God, I'd be interested to see the impact of that as it actually happens. SAP, Microsoft is used across businesses globally, as is SAP. Their enterprise resource planning. But this is, if anyone thinks that AI investment, it's not a serious long-term thing for the tech industry, then this shows it certainly is not. So that was quite a tie-up there.
Yeah, just quickly on AI, actually, on one of our corporate clients, it is tiny, Superseed Capital. And they do very early stage venture capital funding of sort of SaaS businesses, but a lot of it is involved in AI. And they have this wonderful sort of leverage through the British Bank loan scheme. The sad bit is it's a very small company, so people really struggle to get invested in it. But if you want early stage AI, which to me is like, whoa, you can have stellar gains there, Superseed Capital is well worth looking at.
Yeah, it certainly is, and it's very practical sort of AI applications as well in terms of manufacturing, advanced manufacturing, for instance, in aerospace, increasing efficiency in production, which is one of their, business efficiency is one of their focus. But yeah, a great way of getting exposure to companies that are early stage in that. I'm talking about exposure to investment in tech, and this is certainly for larger companies and this is for software, is HG Capital Trust, and ticker's HGT. They announced their first quarter results to the period ending March, and as I say, this one's very focused on SaaS software as well, and they reported revenue and EBITDA growth of 30% and 27% respectively across their top 20 investments over the last 12 months. So very strong momentum there. And Superseed, who also came out with their annual statement on their portfolio companies, reported nearly 200%. Now, bear in mind, early stage companies, but nearly 200% growth for their SaaS software companies. So it's an interesting time for the SaaS software space. Superseed noted that global valuations, they refer to what's called the EM Cloud. It's the Bessemer Emerging Cloud Index of 75 public listed companies and states, declined 62% in terms of valuations, but you can see, from their two results, HG and Superseed, that there's still, very much strong growth in that. And even Sage is SaaS, it's SaaS software growth. So maybe a good opportunity to look more closely at the space, given valuations have come off.
Yeah, look, and I think in general this week, the trading statements from tech and transitional energy companies have been pretty positive. The week started well with both Diploma and Currys upgrading their guidance. I don't know if you wanted to comment on either of those, but they did.
Yeah, they did. I just looked briefly at them.
Yeah, no, I mean I did as well.
Yeah,
but it was just they were both upgrades. It's so nice to see that coming through. So yeah, no, it's fine. Back onto your list.
Yeah, super. Cerillion, who we mentioned many times in this podcast. They had 6 months results ending March, and Cerillion is very focused on the telecommunications industry, but in particular, it's software for billing systems and managing services, and telecoms operators are constantly trying to evolve their services to make better profits than they are doing. Anyway, Cerillion saw its interim revenue up by 27% to 20.5 million. It also benefited from new customers, new orders. The recurring revenues were up by 34% to 13.1 million, and their gross margin increased to 81.5% from 78.5%. So, it's all software licensing, so very high margin. But what was quite interesting to see here was on their total new orders coming in, and they were up by 40%, 15.3 million, and they got net cash up over 40%, 23.6 million. So everything continuing to move the right way for Cerillion. Very good.
Very good. Are you going to comment on? We had both the big sort of telecom plays reported this week, didn't they? BT and Vodafone seem to be more about job cuts than anything else. But the figures, by the way, are so complicated to read. Extraordinary. But I don't know if you want to make any comment on them, Phil, or was happy to let them pass.
I think we're happy to let them pass. I mean, BT was interesting to see how they rolled out that fibre network. And their near-term plans to pass up to 25 million premises. But we've been looking at EV charging, Andrew, haven't we? We had a conversation with Pod Point in the week and about that, and about the longer-term potential for charging networks. But it kind of shows, I remember when the fibre network started rolling out, and all this dark fibre was in the ground, and sort of loose end outside every house for a connection. And maybe we will see the same happen with EV charging networks.
Yeah, I mean, it would come up. I mean, what I find extraordinary about both BT and Vodafone, they're hitting their all-time lows, sort of thing. You just think, how much lower can they go? Forget what's going on. I know it's all, but I mean, it's still telecommunications. It's not a dead industry, is it? I don't know. I'm not the expert on them. I'll be absolutely honest with you, but I do find it interesting that they are both sort of hitting all-time lows. There you go. But yes, moving on to your point, I think that we do remember as you were saying, the way that the fibre industry was lots of little players that then consolidated into a handful of very big players. And of course, you have to throw a lot of cash at it. But then once you've got it up and running, it's just a cash cow. And yeah, I think the electricity charging game could be very, very similar. Because at the end of the day, we're probably going to have charging points somehow in the pavement or on the roadside for all of those houses in London, so you park your car outside your house, so to speak, and you can charge it. And there is a complete network to be put in place. As you say, Pod Point is the quoted one in the UK. Unfortunately, it had a very successful flotation. It's tricky because it's got a huge holding by EDF and also Legal and General infrastructure, which makes there's not a lot of free float. So the share price has been very disappointing. But it's a very interesting company, and they've got a lot of cash, 70 million. The other one, which I think you and I were talking about, so I'll let you talk about it, Phil, but which I think is a really, really good business. Unfortunately, it's a Dutch business, is Alphen, and they're doing a similar thing, aren't they?
Yes, they are. But theirs is an interesting. It's a mix of it's charging infrastructure and equipment, but also they're exposed to the smart grid. So they have their own transformers and monitoring software for those transformers. So, as generations probably getting more localized, or user demand is changing fairly significantly, on a more localized basis, and you're needing more transformers and distribution, but also you've got this variable supply, and you want to know what's happening between transformers on their loadings. They have technology and software for doing that. So they saw, they just reported results, and the EV charging was down, that side of business, but they reported, they said, look, we had a high in that in 2022, but it was the sales from the smart grid and related technologies that were up. And it was very interesting for us to hear, I think, from Pod Point, of what they're doing with their software, whereby it's managing loadings on charging infrastructure, and a wider potential opportunity for that, because it is all going to come down to, how generation is varying and how demand is varying throughout and on a daily basis. And we've talked about this in, many an occasion in relation to energy storage. So, the whole smart space, grid space of managing demand is very interesting.
Yeah, look, I mean, I think Alfen is a really good company. It's a real shame that it's on the Euronext Amsterdam, not on the UK market. It's a big company as well, by the way. It's a sort of €1.5 billion market cap, but it's also halved in the last 18 months, just as obviously everyone's been pulling out of transitional energy stocks. So, but it is a great company, well worth having a look at. I'll tell you what, Phil, whilst we're sort of on the transitional energy side, EVs, charging points, etc., one of our corporates actually it's actually been a fantastic performer over the last 5 months. Equipmate had a bit of news out that I thought was really interesting on Monday. You might want to comment on that.
Yeah, this is they are Norfolk based, developed electric motor and inverter technology. And their end markets obviously are, they've got for automotive, but it's for high-end automotive, supercars, involved in aerospace as well, and marine, but also, heavy transport is a big focus for them. So it's their motor ranges, power ranges from 100 kilowatts up to 440 kilowatts. And they announced that India-based Sonacopstar has signed a licensing agreement with them for their technologies, and that they are going to plan to manufacture and sell Equipmate's technologies across Southeast Asia. So it's in India, Thailand, and what they call selected South Asia countries, and that serial production of systems based on Equipmate's tech are going to commence in 2025. So pretty exciting for them, I think. Validating the value of the technology, but also opening up new markets for Equipmate.
Yeah, I think it's had a tremendous performance. It's almost doubled in the last 5 months. So not surprising. I think a few people are taking a few profits. But again, actually, interesting enough, 800,000 shares traded so far today. I read that right. Probably got the noughts wrong. No, I'm right. Actually, 800,000 shares traded so far today. Anybody who says there's no liquidity on Aquis, I think that proves them wrong. Just talking of which, quickly, of course, Aquis. If anybody listening is going to their 10-year anniversary party tonight, we'll see you there. I'm not sure you got the invite, Phil.
No, I didn't, Andrew. I got invited to the London Stock Exchange drinks.
Well,
you better have a word with that quiz.
There you go. All right. Have you got anything else, or is that enough for today?
I think we'll wrap it up there for today. Hey, Andrew.
I told you I'd give you a nice, easy time. All right, that's we'll call it a day there. Again, as I always say, if anybody's got any comments they want to make to us, or stocks they'd like us to actually talk about, then do let us know. We love a little bit of interaction. Funny enough, I have had quite a few people recently actually just complimenting us on this podcast, and they really enjoy listening to it. So I appreciate those compliments as well. Please do keep spreading the word, and we'll be back again next week. Thank you.
Certainly will.